Hello, my YouTube friends. Well, buy low, sell never. That's the strategy I want to implement. And if you don't know what I'm talking about, and even if you do, stick around for today's video. Good morning. My name is Adam Kahn, and this is Investing with Adam K. Still the rational investor as well. Um, Now, as much as I say good morning, I'm guessing by the time I get it uploaded and everything else, it'll be afternoon or the end of the day. I hope you're all doing well. I hope it's as beautiful as where you are as it is here. Awesome weather today here in Las Vegas. Anyway, what am I talking about when I say buy low, sell never? What I try to do is I have a list of 10 companies for the most part that are the companies that I want to own forever. And they're the companies I consider the best of the best. It's going to include Amazon, it's going to include Google and Meta, Microsoft. I even have Palo Alto Networks on there for me. Tesla is one of them. The companies I just think are really phenomenal. Some of you might have Johnson and Johnson or whatever it is the companies you love and think are the greatest companies around. What I look for are opportunities when they're out of favor and the stock is having trouble and it's going down, when I think for the most part, nothing's really changed in the company. Maybe they're having a bad couple of quarters, maybe something happened politically, or maybe they have a lawsuit against them. Whatever it is, it's causing their stock to drop in value. I see those as good times to really dive into the stocks you've always wanted to. I'm going to call out a buddy of mine who doesn't even watch the channel, so it's okay. But my buddy Steve, he and I are in a pretty similar position. We go out to lunch once a week on average, and we often talk about the markets. When Amazon and Google were falling and below $100 a share, and it was also around the time when Meta was struggling as well, we were sitting there talking about sometime in the next 10 years, I bet these stocks are over $1,000 a share. So we both kind of agreed, yeah, we think so. So we're going to buy some of the stock and just put it away. That's exactly what I did. And I'm not saying it to pat myself in the back. Please don't look at it the wrong way. I'm just using it as an example as the things I think people should look for when they're investing. Now, keep in mind, I forgot to say it in one of the other videos. This is not financial advice. You guys need to do your own research. I am not giving any investment suggestions. I'm just a guy on YouTube talking and sharing information that works for me. By all means, reach out to a financial planner. Talk to somebody who can get you educated and help you for your specific situation, because my life and yours are going to be totally separate and things need to be individualized for people. But when we were talking about those stocks, I really believed that. And my attitude was I should buy these and put them away the way I talk about a safe deposit box and do my best to really never look back and not get too stressed about the ups and downs and if they have a 10 or 20% pullback or whatever it is. Because I still think both of those companies, Google and Amazon, will be at the equivalent of $1,000 a share at some point. Now, that might be 30 years away, but that's still 5 times bigger than where they are today, or pretty close because they're both around $200 plus or minus, well, minus, but around that price range. So they would have to actually be 5 times as big. My buddy Steve, well, he thought the same thing, but he gets too emotional about the ups and downs. And he was all too excited to have sold it once and bought it back. And then when it got around $100 a share, he sold it again, figuring he'd have an opportunity to buy it back, and hasn't since. And that's the trouble and problem with trading and thinking, oh, it went too far and I'll just get it back cheaper. Too far is not like there's no way to calculate or determine that. And, I'll call myself out. That's what I've done to myself with Costco, which I think is a great company that people should own, including myself, that's just gotten away. And I keep thinking, oh, I'll get it when it gets cheaper. I bought a tiny bit, but a joke of a position not that long ago. And I keep waiting for a pullback for me to be able to buy more. Now, By the time that pullback comes, it may be triple the price. So even if it falls in half, it still might be significantly higher than here. So my suggestion is have those list of companies and wait for those opportunities and really add on if they get a really big pullback. In the meantime, they're still companies that I want to own. I see a few guys talk about how tough a stomach you have to have in those scenarios. I'd still want to own Amazon. So if I didn't have it already, I'd pay up and get a little of it and have it in my portfolio and at least have it on my screen. So if it does fall to 100 or 120 and I have another opportunity to really add on, I'd probably do so. Again, that's just what I would do. I'm not recommending anything for you guys. So those are the opportunities I really look for to put on a big position. And understand when that happens, it isn't because there's good news. It's always going to be scary. It's always going to have something bad going on that makes people worry that the stock is going to do worse and worse in time. I also tend to trade stocks that aren't the ones I want to buy and own forever. And I'll address one that I talked about yesterday. And I have mixed feelings about the fact that I even shared it. Like Cracker Barrel. I do not put Cracker Barrel in the category of Amazon or Google or the others. I just thought the news is pretty bad. They're cutting the dividend pretty good. I gotta imagine in 20 years, grandmas and grandpas, which will be me, are still taking their family on road trips and stopping at a Cracker Barrel along the way. Maybe that's not the case, but it's just kind of my thought process on them. But I still don't want to buy them and own them forever. Now, with those other ones, the reason I say buy low, sell never is when I talk about Steve, he's never bought it back. Now they're at 180, $185 a share. And he's sitting there kicking himself, knowing that he should still own them, and he bought them around $80 each. That's why you never sell those companies. When you get into the great companies, if you ever have an opportunity to get into them, you don't look back. You think of it as money that is spent and gone. And my objective is one day, hopefully it's a lot higher at the time that it makes sense to get out of it and move it into dividends or use it for my retirement or whatever it is I need to in the future. But when I buy them, the reason I say buy small enough that if it goes down, you don't get too upset is it has to be small enough that you don't need that money. This is something that's an investment in the company that you really like the company you're investing in, and you don't think you will need that money again. No different than if you bought a pair of shoes and you put them on your feet and left out the door. That money is gone. That's how I think about the money I put in those companies and I have in the account. I don't want to confuse that with some of the other companies I have, even the one in the dividend account. I've talked about Nextera Energy Partners a lot, NEP. I saw a great opportunity when the stock fell to $22 a share, $23 a share. I still saw it as a bargain every time it fell down and got close to there, even as low as $26. Well, it's drifted back up. It's around $34 a share where it closed on Friday. And I don't see it as quite the same bargain. I'm not looking to sell it, but my ultimate goal was maybe it got to 40 or maybe even $50. And I don't know what I would do from there, but I'll tell you I bought more than I intended to. So I'll shave down the position or I'll sell covered calls along the way up, collecting more of a premium. I actually recently sold some of the August $40 calls. My thought process is I'd be happy to let go of some of the shares if it gets to $40. And if it doesn't get there, I'm happy to collect the 40 cents that I got, which I know doesn't sound like a lot of money, but it's every 2 months is where I went out and sold it. So that's not that long a time frame. And I think of it as a smaller additional dividend payment that if the stock goes above, I'm happy to sell it there anyway. And if it doesn't get there, I kind of think of it as free money, which is why you see those videos talking about selling options as free money. It is, but it isn't, and it isn't that simple. So don't be tricked by the people talking about how easy it is and it's just free money. You're using money to get those returns, and there's a lot of risk depending on what you're doing with it. You have to be very disciplined trading options. I'd be kind of curious about you guys and what your stocks that are the ones that are buy low and sell never, and do you own them? My suggestion is if you think they're expensive now, and again, this is not financial advice, this is just what I do, is even if they're expensive, I put on 5 or 10% of what I really want to buy. And then I hope there's some bad news in the future where I can get them at a discounted price. I still trade other things and I try to have some money on the sidelines for that opportunity. Similar, I don't know if you guys have been watching, I see Boeing in that position. Every time they had bad news come out, it would push the stock down, around $175 a share, in that range. But then it seemed to stop and didn't go lower. That's kind of, as a trader, what I look for. I look for that level where when the bad news is coming out, somebody's willing to buy it and take all of the volume from the people who are no longer happy listening to the bad news saying, oh boy, I don't want to own this anymore. Somebody who's done a lot of research into the valuation of a company is willing to take the other side of all that panic at that price. To me, that's super important information. And that tells me a lot about the valuation of the company. I know sometimes I've gotten some pushback about, maybe not looking at some of the data. But I also think that there's a misunderstanding that if you are looking at a lot of the data, do you really think you have insight that others don't? Do you really think that in the books, in the cash flow, in the sales ratios and everything else, that you're going to be able to see it better than, you know, Bill Ackman's group of people, or Warren Buffett's, or the CEO of the company, or the other people on the board? They know what's really going on, no matter what's going in the books, no matter what's going in the annual report. They understand it on a day-to-day basis, and they're probably sharing that with the top investors who are buying 2, 3, 5% of the company. Not the guys just looking at the data and going through it and making their own analysis. It's a little bit more to it than that. So it's really important to just pay attention to what news is coming out. Is it really good news and the stock is not going higher? Is it really bad news and the stock has finally gotten to a point where it stopped? And then determine what you want to do from there. My guess is if you pick great companies and use the buy low, sell never strategy, you outperform the market and you do pretty well. Yeah, you have to pay attention to the type of company you're buying, like Pfizer, which I've talked about. I don't expect Pfizer to really, be a huge hit that outperforms or does incredibly well. I think of it as a big, boring stock where at least I feel like my money is pretty safe and secure. I'm comfortable having a decent sized position in a company like Pfizer. But at the same time, I really don't see them having the same type of growth as what Google or Amazon might, where I just don't predict, and maybe I'm wrong, and really I hope I am, but I don't really predict that Pfizer is going to double or potentially triple in the next 3 to 5 years. Maybe I'm fortunate and it does, but it's more that I mix that in along with the other stocks. In some ways, some think that might be a mistake, and diversifying even a mistake. And if you want to just have a diversified portfolio, by all means, find 3 or 4 ETFs that cover the whole spectrum of the markets and don't even worry about it. But if you want to really spend the time and try to do better, well, pay attention and understand the different sectors and how the different stocks behave and what you're looking for in terms of of your investment. In some ways, I joked with my brother, and I kick myself, and I don't kick myself, that I thought I should have just put all my money in Google and Amazon and Meta when they were off out of favor. I wasn't comfortable doing that because still you don't really know what's going on in the internals of the companies, and I didn't want to take that type of risk. I only kick myself because of how they've performed. Anyway, again, I hope you're having a nice weekend. I hope you're having a nice Saturday. Looking forward. I think maybe it's the following week. NVIDIA reports soon. Before I forget, if you haven't already, do me a favor and hit that subscribe button, smash that like button, make some comments. Like I said, tell me about the stocks that you guys have as your buy low, sell never type of companies. And then I find it helpful that I really have an account that I buy low and sell never. I don't have online access to it. I can't trade it on the computer. It just sits somewhere, and I would actually have to call somebody to be able to try to do something in that account, which stops me from doing anything. And then I keep other funds in the ones that I'm a little more active in. So at least that's what works for me. So again, have a great day. Maybe I'll have some time to say hello tomorrow. Hopefully, have enough time to get this set up and uploaded and everything. So talk to you soon.